All right, so we had a busy week in the markets. There was a handful of important things that came out. We started earnings season. The big banks released. We had Powell testifying to the Senate, and then we had the CPI report. So first things first, the CPI report, the expected was 3.1. It came in at 3. So that helped. That set the markets up, although they did sell off the next day, and then they came right back on Friday. So kind of an interesting week there. As far as rates go, it's looking like we're going to get a cut in September. That's almost certainly going to be a cut by the looks of things. I think the odds are at about 75 or 80%. So again, obviously not a guarantee, but it's looking rather likely we get a cut in September. And then I think it's also more likely than not that we get another one in December. So it's looking like 2 cuts are going to happen. And that's obviously bonds sold off on that news. So that was interesting there. But when you look at that, I think that my takeaway from at least the stock market this week was, number one, the news that I haven't talked about yet. We've seen a big sell-off in the big tech names. And the NASDAQ was actually, it was up slightly on the week, but the S&P was up almost 1%. The NASDAQ was up, I think, about 20 basis points. But you look at NVIDIA was, I think, up a tiny bit. Apple was up nicely, but all of the other big tech stocks were down quite a bit. Google, Amazon, Tesla, basically the big tech indexes. And if you look at the one thing, the equal weight S&P index was up quite a bit. So I think that the take-home point may very well be that the small caps and the mid caps very well could outperform the large caps over the rest of the year. And for the reason being is they are more fairly valued than the larger companies, especially the really large ones. So we could see a rotation into the more smaller / medium-sized names, or even the more value type names. That's something to keep an eye on. As far as the bank earnings go, J.P. Morgan surged 20. So J.P. Morgan's stock was up a lot. They released decent earnings. Wells Fargo not enough. Citi again 10% rise in profit, but they did lower guidance. So my takeaway point from the bank earnings is kind of meh. It was kind of mixed, not great, but not necessarily bad, and that's something that is kind of interesting, right? If you look at it, actually, which is kind of interesting because the Dow was up the most out of any of the indexes on the week, up 1.6%. The S&P 0.87, and the NASDAQ just 0.16. One other thing I seen this week, Morgan Stanley, so one of their analysts, Mike Wilson, again, really basically saying a 10% correction is highly likely. I think so too. The problem is, when does it happen? It could be 6 months from now. It could, nobody knows when it's going to happen. And maybe it goes down 5% next week, but it goes right back up 5 or 10% again. So the problem with people that make these kind of predictions is a lot of times they're right, but the problem is the timing, because you can be right about the 10% correction or the 20% correction, but if you don't time it right, you're wrong, right? So that's something that not enough people take into account when they see stuff like this. My strategy is quite simple. Keep buying stocks that are fairly valued. Continue dollar cost averaging into the indexes, not as much the ones that are overvalued. But when it comes to the S&P, when it comes to the NASDAQ, I would personally, this is just my personal belief, I would never stop dollar cost averaging. My goal is to have the indexes make up roughly, 20-25% of my overall portfolio. The rest will be individual stocks, probably a small amount of bonds, depending on the market outlook, et cetera, et cetera. It's hard to say that for sure because the times are always going to be changing. But again, my strategy with that is when it comes to the indexes is you just eventually you're going to get enough shares to where you can sell covered calls. After that, continue reinvesting dividends, selling covered calls so that you're just generating income to where eventually you're not even going to have to start reinvesting. That's just my strategy. But again, when it comes to a correction, yeah, we are due for a correction. The problem is nobody knows when it's going to happen. As far as, again, the markets, like I said, the S&P was up slightly on the week. The NASDAQ was basically flat, up very slightly. If you look at NVIDIA, again, same thing goes there. NVIDIA was up ever so slightly. Although, again, it did sell off big time on Wednesday. I mean, look at the sell-off on Wednesday. It was down over 5% at one point. So, like I said, I think that let's just go look here. Let's check out the equal weights index. This is the equal weight S&P. As you can see, it was up very nicely on the week, actually. It was up 2.5%, which is very good. If we check out the small cap index here, that was also up very nicely, up 3.5%, which is that's crazy. If we check the mid cap index, also up nicely. Let's see, about 2.6. So again, I think that we could very well see a rotation into more small and mid cap. When you look at the average investor typically it's just buy the NASDAQ, buy the S&P. But when you look at the pros, yeah, they're doing that, but the pros are also a lot more concerned with valuations and the long-term outlook, et cetera, et cetera. When you look at the long-term overall returns of small cap, mid cap, and large cap, they're fairly similar. I mean, typically, over the really long run, small cap has done the best, mid cap slightly better than large cap. I think that they're going to be fairly similar over the next, let's say 50 years. But right now, large cap clearly is more expensive than the mid cap and the small caps. So I would be looking to diversify into a little bit more mid caps and small caps. Now, I'm not necessarily loading up on the indexes because when it comes to my personal the stocks I buy personally, they are already disproportionately small caps and mid caps. So I don't have a lot of large caps. I mean, I don't own any of the big tech, any of the Mag 7. I don't think I own any companies and probably in the top 10 or 20 market cap in the world. I don't think I own any of them. I mean, as far as my major holdings go, I think of my top 10 holdings, my top one probably is like a $50 billion, maybe $100 billion market cap. So that's just how things have worked out. It's not that I don't hate the big tech ones necessarily. I just think that, number one, I already have a decent sized position in the NASDAQ ETF and in the S&P. And that's another thing that people need to keep in mind is that if you have a large position in VOO or SPY or the QQQs, it doesn't really necessarily make sense to be buying the Mag 7 stocks because you already have a good sized position. Why would you add even more when you already have a good sized position? So that's something to keep in mind as well. But again, my predictions going forward, I think we are overdue for a correction. The problem is nobody knows when that will happen. Nobody knows when that's going to happen. So near term, in any given week going forward, if I had to bet up or down on the stock market, I'm still betting up. Until we hit a clear downtrend, I would still bet up. As far as the earnings seasons go, I think it's going to be relatively average. I'd say probably the usual 75-80% of companies beat. I don't think it'll be great necessarily, but I don't think it's going to be bad necessarily either. I think it'll be fairly average. So anyway, that's basically what I wanted to bring up there. I mean, the last thing I wanted to bring up, Bitcoin. Bitcoin was up slightly. And the good news with Bitcoin is it's looking like the German government, I believe, they ran out of Bitcoin to sell. So I think that virtually all the selling pressure is gone with Bitcoin. Technically, the Mt. Gox stuff could bring things down a little bit further. But I think that, again, we're over. Like, if we get a rate cut, I mean, I don't see how Bitcoin won't go up on that. And again, the exchanges, the amount of Bitcoin on exchanges is still going down. So eventually we're going to have to see a momentum play on the upside. So again, that's what I'm thinking with Bitcoin. Nobody knows what's going to happen there, though. Again, I think we're going to see a very bullish next year or so, but it's going to be volatile like it always is. So anyway, that's what I wanted to bring up about earnings and the news from this past week. If you liked the video, please like, comment, subscribe, and stay tuned for more.